The power of investing, why your money needs to grow. Investing is not just about making money, it's about securing your future. Investing is crucial for building wealth. It allows you to take advantage of opportunities that can multiply your initial funds. It's like planting a seed that grows over time. With patience and care, that seed can turn into a flourishing tree. When you invest, your money works for you. It harnesses the power of the market to generate returns. It earns more money, even while you sleep. This passive income can provide financial freedom and peace of mind. This is the magic of compound growth. Your earnings generate their own earnings, creating a snowball effect. Imagine a snowball rolling downhill. It starts small but grows larger as it picks up more snow. As it rolls, it picks up more snow, getting bigger. This is how your investments can grow over time. Your money does the same with investing. The longer you keep it invested, the more it can grow. The longer it's invested, the more it can grow. Time is your greatest ally in the world of investing. This is why it's important to start early, even with small amounts. Small investments can grow significantly over time. Don't let fear or lack of knowledge hold you back. Educate yourself and take the first step. Investing is for everyone, not just the wealthy. Anyone can start with the right mindset and tools. With a little guidance, you can start your investment journey today. Seek advice from trusted sources and take action. Remember, the best time to plant a tree was 20 years ago. The second best time is now. The second best time is now. Start investing today and watch your money grow. Demystifying the market. Understanding stocks and how they work. Stocks are a fundamental part of the financial world, and knowing how they operate can be incredibly empowering. Let's break down the basics of stocks and the stock market. This will help you make informed decisions and potentially grow your wealth. A stock is simply a piece of ownership in a company. It's like owning a small part of a business. When you buy a stock, you're buying a tiny slice of that business. This means you have a claim on part of the company's assets and earnings. Companies sell stocks to raise money for growth. This capital can be used for various purposes, such as expanding operations, developing new products, or paying off debt. The stock market is where these stocks are bought and sold. It's a dynamic environment where prices can change rapidly. Think of it like a giant auction. Buyers and sellers come together to negotiate prices. Prices fluctuate based on supply and demand. If a stock is in high demand, its price will rise. If more people want to buy a stock, the price goes up. Conversely, if more people want to sell, the price goes down. If more people want to sell, the price goes down. This constant ebb and flow creates opportunities for investors. When you own stock, you can profit in two main ways. The first way is through capital gains. First, the stock price can increase. This means the value of your investment grows. If you buy a stock at $50 and it goes up to $75, you've made money. This is known as a capital gain. Second, companies can pay dividends. These are regular payments made to shareholders from the company's profits. These are payments made to shareholders, usually from profits. Dividends provide a steady income stream in addition to any capital gains. Don't let the stock market intimidate you. It's simply a marketplace where buyers and sellers meet. With a little understanding, you can navigate it with confidence. Educate yourself, stay informed, and make wise decisions. Remember, knowledge is power, especially when it comes to investing. The more you know, the better equipped you'll be to make smart investment choices. Starting small, dreaming big, investing with limited funds. It's a journey that begins with just a few dollars and a lot of determination. You don't need a fortune to start investing. Even with a handful of coins, you can begin to build your financial future. In fact, you can begin with very small amounts. The important thing is to take that first step and keep moving forward. The key is to start somewhere and stay consistent. Just like planting seeds in a garden, your investments will grow over time with care and patience. One option is micro-investing apps. These tools are designed to make investing accessible to everyone. These apps allow you to invest spare change from purchases. It's a simple and effective way to start building your portfolio. For example, if you buy a coffee for $3.50, the app rounds up to $4 and invests the extra 50 cents. Over time, these small amounts can grow significantly. It may seem small, but those cents add up over time. Consistent investing, even in tiny amounts, can lead to substantial growth. Another option is fractional shares. This method allows you to diversify your investments without needing a large sum of money. These allow you to buy a portion of a share of stock. It's a great way to invest in high-value companies without breaking the bank. This is great for investing in expensive companies without needing a lot of money up front. You can own a piece of your favorite companies. Remember, every journey starts with a single step. Your investment journey is no different. Don't let limited funds hold you back from starting your investment journey. With the right tools and mindset, you can achieve your financial goals. Section 4. Choosing your investments, research and due diligence. Picking stocks can feel overwhelming, but it doesn't have to be. Start by researching companies you understand. Think about the products or services you use regularly. Are these companies publicly traded? Learn about their financials, management team, and future prospects. Look for companies with a strong track record and a solid plan for growth. Don't be afraid to ask questions. Knowledge is key. Talk to financial advisors or experienced investors. Remember, investing is not gambling. It's about making informed decisions based on research and analysis. Take your time, do your homework, and choose investments that align with your financial goals. Section 5. Managing risk diversification and long-term perspective. Investing always involves some risk, but there are ways to manage it. Diversification is key. This means spreading your money across different investments. Don't put all your eggs in one basket. Invest in a mix of stocks, bonds, and other asset classes. This helps reduce the impact of any single investment performing poorly. Secondly, adopt a long-term perspective. The stock market goes up and down in the short term. Don't panic sell when the market dips. Stay focused on your long-term goals. Remember, time is your greatest asset in investing. The longer you stay invested, the more opportunity you have to ride out market fluctuations and grow your wealth. Section 6. Beginner-friendly platforms. Tools to empower your investment journey. Many user-friendly platforms make investing accessible to beginners. Robo-advisors are a great option. These automated platforms create and manage a diversified portfolio for you based on your financial goals and risk tolerance. They typically charge low fees and require minimal effort from the investor. Another option is online brokerages. These platforms give you more control over your investments, allowing you to buy and sell individual stocks, ETFs, and other securities. Many online brokerages offer educational resources and research tools to help you make informed decisions. Remember, the best platform for you depends on your individual needs and preferences. Research different options and choose one that aligns with your investment style and comfort level. Section 7. The patience game. Embracing the long-term nature of investing. Investing is a marathon, not a sprint. It's about slow and steady growth over time. Don't expect to get rich quick. Be patient, stay disciplined, and avoid making emotional decisions based on short-term market movements. Remember, even the most successful investors experience setbacks along the way. It's normal to make mistakes, learn from them, and keep moving forward. The key is to stay invested, stay informed, and stay the course. Investing is a journey, not a destination. Enjoy the ride, and remember that the power of compound growth works its magic over time. Start small, stay consistent, and watch your money grow as you build a brighter financial future.